The wealthy don't just invest for growth, they invest to get paid every single month. In this video, you'll learn how dividend investing works, why so many rich investors use it, and how anyone, even beginners, can build passive income through dividends, one small step at a time. Stay until the end because we'll go over the biggest benefits, the risks to avoid, and how you can start dividend investing today, even with just a little money. Dividend investing is when you buy shares of companies that pay you money regularly. These payments are called dividends, and they usually come every 3 months. This money comes from the company's profits. Instead of keeping all the profits, the company gives some of it back to its investors, just for owning the stock. If a company pays $1 per share per year, and you own 100 shares, that's $100 in your pocket every year without selling anything. Rich investors love dividends because they create passive income, they reward patience, they help build long-term wealth. Dividend investing means buying stocks that pay you regularly just for owning them. It's money that goes into your account and you don't have to sell anything to get it. How dividends help build wealth. Most people buy stocks and hope they go up in price. But with dividends, investors don't need to wait for the price to rise. You get paid for holding onto the stock. And when you reinvest those dividends to buy more shares, you start to earn even more dividends. Over time, this creates compound growth, money making more money. It's like planting a tree that drops seeds. Each seed becomes a new tree, and soon you have a forest. Rich investors know that reinvesting dividends turns small amounts into large ones over time, all through the power of compounding. What type of dividend stocks do experienced investors trust the most? Here are some categories smart investors look for. Large, steady companies. These businesses are well known, profitable, and have a long history of paying dividends. Consistent dividend growers. Some companies raise their dividend every year. That's a sign they're strong and care about rewarding their investors. High-yield dividend stocks. These pay more than average, but they can sometimes be risky, so it's important to check their stability. Real estate investment funds. These own things like offices, homes, or land and pay most of their earnings to investors as dividends. Smart investors look for companies that pay reliable, growing dividends, not just highest yield. What are some examples of popular dividend-paying stocks? Here are a few well-known companies that regularly pay dividends. Coca-Cola, KO. Johnson & Johnson, J&J. Microsoft, MSFT. Apple, AAPL. These companies are often called dividend aristocrats because they've consistently increased the money they pay to investors over time. They are strong, reliable businesses, and they keep paying you to stay invested. How do the wealthy decide if a dividend stock is worth buying? They use 2 key numbers. 1. Dividend yield. This tells you how much you'll earn compared to the stock price. For example, if a stock is $100 and pays $4 each year, the yield is 4%. A higher yield sounds good, but very high yields can be risky. 2. Payout ratio. This shows how much of the company's profits are going towards dividends. If a company pays out too much, it might not have enough money left to grow or handle tough times. For example, a 50% payout ratio means the company is keeping half of its profits and paying out the other half. A payout ratio of 80% might mean the dividend isn't sustainable. Experienced investors look for a balanced mix, a fair yield and a safe payout ratio. That means the company can keep paying even during rough years. The rich don't just chase big numbers, they look for safe, steady payouts that last. So why do wealthy people often prefer steady dividend stocks over trendy growth ones? Dividend-paying companies are often stable and dependable. These businesses have been around for a long time, make steady profits, and share these profits with their investors. They're not exciting or fast-growing, but they're consistent, and that's what wealthy investors love. And dividend income gives them freedom. Instead of selling stocks to get money, they live off the dividends while letting their investments grow. The rich use dividend investing to create income that doesn't depend on market ups and downs or on having to sell anything. What risks do experienced investors watch out for with dividend stocks? Even though dividend investing can be powerful, it's not risk-free. Here's what smart investors avoid. Dividend cuts. If a company runs into trouble, it might lower or stop its dividend. High yield traps. A very high yield might mean the company is in danger, not doing well, or losing money. Slow growth. Some dividend stocks don't increase in value much. That's why investors often mix income stocks with growth stocks. Taxes. In some countries, dividends are taxed, but using retirement accounts or tax-advantaged accounts can reduce that burden. The rich know it's not just about picking any dividend stock. It's about picking the right ones and avoiding the traps. How to start dividend investing today. So, what's the first step wealthy investors take when building a dividend income stream? It's easier than you think. You don't need thousands of dollars to begin. Here's how anyone can start. Open a brokerage account. Choose one with low or no fees. Look for reliable dividend companies. Start with those that have a strong record of paying dividends over many years. Start small. Even $50 a month can grow over time. Reinvest your dividends. The DRP, Dividend Reinvestment Plans. Use DRP, Dividend Reinvestment Plans, if available, so dividends automatically buy more shares. Be consistent. Keep investing every month and give it time to grow. Some people also invest in funds that hold many dividend stocks. These give you instant variety and lower risk. Great for beginners. The wealthy build wealth slowly and steadily. Anyone can follow the same path. How long does it take to see results with dividend investing? In the beginning, the income may feel small, a few dollars here and there. But over time, it grows faster. Why? Because every dividend you reinvest buys more shares. More shares means more dividends. After a few years of steady investing, many people start to notice real growth. After 5, 10, or 15 years, the results can be life-changing. This is where time becomes your biggest advantage. In dividend investing, the first few years feel slow, but later, the growth speeds up and the results can surprise you. Why is dividend investing a powerful way to build long-term wealth? Because it creates freedom. It builds income without selling assets. It offers growth without guessing the market. And it brings peace of mind, knowing there's money coming in no matter what. Over time, investors can live off their dividend income. They can stop working, retire early, or use the money to support family or causes they care about. With enough time, dividend investing can provide monthly or quarterly income, a growing portfolio, financial independence, peace of mind. It's slow, yes, but steady wins. The goal isn't just to grow money. It's to build a life where money works for you and never stops. Rich people don't just buy stocks, they buy steady income. Many who start dividend investing later often wish they had started earlier. But you can still start today. It's not too late to begin.